So again, good morning. My name is Danny Fitzgerald. I'm the acting regional director. I'm just going to kick off with a simple welcome this morning and hand it off all the moderating of the panel to Brianna Weisinger, who's one of our fantastic Small Business Development Center directors. But really wanted to appreciate you all, small businesses, for getting on. We know that things certainly have been quite the struggle over the last 6 months with the pandemic, but also really want to appreciate all of our lenders. We have here today, we have Joe Salas from CDC Small Business Finance, Juliet from Accion of Southern California, Kelly Quinn from the CDFI portion of International Rescue Committee, and Darius from Veteran Launch, also Main Street Launch, Adela from Opportunity Fund, and Shreya Sasaki from Mission Driven Finance. And so we really appreciate everybody. We also have Sean Lynham, one of our business advisors, who's here and able to also kind of talk off things. Really do want to appreciate also our sponsors of this program. This has been a regular program. We've switched it online, obviously, with the pandemic, but Home Street Bank, Main Street Launch, CDC Small Business Finance, Marble Bridge Funding, and Primary Funding. Yes, I see you, Greg. And so we appreciate certainly our sponsors of this. That allows us to have programs like this, really be able to educate small businesses. So with that, I'm going to hand things off to Brianna to kind of moderate the panel and take care of everything, and really appreciate her filling in for me this morning when I ended up getting double booked.
Thank you, Danny. Good morning, everybody. Just like quick intro on me, I'm Brianna Weisinger. I'm the director of the South San Diego Small Development Business Center, and I've been in this role for about the last 3 months, so I've had the pleasure of taking this on during a pandemic while so many small businesses are in need of support from the SBDCs and the other lending agencies around San Diego. So welcome to the entire group. Thank you to our panelists, everyone, for being here. We have a little bit of time and a lot of people and a lot of content to get through, so I want to make sure that we get started off really quickly. And the first thing that we're going to do is ask each of our panelists to just take a minute or two to introduce themselves and share a little bit about who they are, why they're passionate about being here, and what their organization and how it helps people. So if we want to go ahead and get it kicked off, I have a screen full of faces, not just my panelists. So how about we start with Main Street Lending?
Yeah, thanks, Brianna. My name is Darius Mahajer. I'm the Senior Vice President of Development and the Market Manager for Main Street Launch here in Southern California. Main Street Launch is a nonprofit community development financial institution, otherwise known as a CDFI for short, and we're funded by the Department of Treasury, the Small Business Administration, various municipalities throughout the state of California, banks, foundations, and other lending partners to basically capitalize our organization as a nonprofit and redeploy that capital for the purpose of economic development through small business lending throughout our communities. We're a statewide lender. I've been with the organization for a little over 10 years. I work directly with community-based organizations like the SBDC, banks, other lenders, and small businesses as kind of the intermediary between the small business and the capital. So I work with businesses on the application, origination, underwriting, and hopefully get them approval so they can either start or grow their business. As an SBA preferred lender, well, anyways, I think I'll just stop there.
Thank you, Darius. Accion, would you like to introduce yourself?
Yes, good morning, everybody. Thank you for joining us. My name is Juliet Terriman. I work as a business development officer with Accion, and we are a nonprofit micro-lending organization. We're also a CDFI, as Darius mentioned. So we're a mission-based organization. We get funded in similar ways. We're not an SBA lender, but we are funded through banks, private donations, and the city of San Diego in order to provide lending to those who don't yet qualify for traditional lending, meaning banks. So we work with them. We provide a lot of resources, do a lot of education. We have seminars, workshops, and we also provide $200,000. And we have a COVID loan in specific, which I'm sure I'll get a chance to talk about in more detail. But we are here to help the community. We work really closely in partnership with the SBDC and provide education resources to our clients. Southern California, so we're the counties that we service are San Diego County, Imperial County, Riverside, and San Bernardino.
Very nice. Thank you, Juliet. Center for Economic Development.
I guess that's me. So I'm with the International Rescue Committee, SBDC, but part of the IRC is that we have a CDFI as well, the Center for Economic Opportunity. And we work with clients who are either startup businesses or businesses who haven't been able to access traditional financing as well. From any products ranging from a $100 credit building loan to a $20,000 business loan.
Thank you very much, Kelly. IRC does great work in so many different spaces. Opportunity Fund.
Hi, my name is Adela Escobar. Can you hear me? Okay, thank
Yes,
you.
we can.
I am a Community Partnership Officer for Opportunity Fund. I have been in this role for like 3 months now. We are a nonprofit small business lender. We are a CDFI, Community Development Financial Institution microlender. Our mission is to offer financial services to borrowers that do not qualify for traditional lending. We have been around for over 25 years, and we offer working capital up to $50,000 right now due to COVID. And we can do trucking, transportation, mobile food trucks, or small business owners, like SWAMI clients or people with no social security or only with an IT.
Thank you, Adela. CDC Small Business Finance.
That would be me. Good morning, everyone. My name is Joe Solis. I'm with CDC Small Business Finance. As the previous presenters had mentioned, we are a CDC, a CDFI. We do offer micro lending as well. That starts at $20,000 to $50,000. We also have a Community Advantage product that will go up to $250,000. And we do have a CDFI product. If qualified, we'll go up to $500,000 as well. We do small business startups, working capital, equipment, tenant improvement loans. We pretty much will do it all. We are also a 504 lender as well. And I'm filling in for Miriam this morning, so I'm sure you guys are familiar with Miriam down in the San Diego market. I'm actually up here in the middle of Central California. So pleasure meeting you all, and that's all I have.
Welcome, welcome. Thank you for joining us down here in San Diego. Mission-driven finance.
Good morning, everybody. My name is Shreya Sasaki. I'm the Chief Operating Officer at Mission Driven Finance. We are a certified B Corporation and impact-based lender. Our capital comes from private individuals and institutions who are very impact-oriented. That means that over the course of our loan, we are looking for the small business or nonprofit to make a measurable community impact. We have two different loan funds right now. One is our Advanced Loan Fund that covers the San Diego and Imperial County regions. We like to see ourselves as filling a gap after companies have been successful with many of our partners here, Accion or IRC. Love to be that middle partner that can provide $100,000 to $500,000 before a business can be successful to a CDC, a small business finance, or traditional bank. We also currently are operating a nonprofit loan fund for San Diego County-based nonprofits. That's in partnership with the San Diego Foundation, and currently that's offering 0% loans to 501c3s serving the San Diego County region. Thanks, Brianna.
Thank you very much. Just a quick pop in for the panelists. There's been a question about providing your contact information. So if you could jump into the chat and share your contact information with our audience, that would be awesome. Sean, SBDC.
Great. Good morning, everybody. I'm a business advisor with the Small Business Development Center, the South San Diego office. And my background is pretty pretty common with most of the advisors with the small business development. Very entrepreneurial. I've got probably 20 plus years of experience opening businesses, very entrepreneurial background, and so we're able to really provide some insights into business topics and decisions that come up with clients that we work with. So we have a somewhat of a unique position to be able to work with great entrepreneurs and also the great lenders that we have on the panel today. And we play a position in between that to really help business owners, entrepreneurs make good decisions and prepare themselves to start the process of bringing on capital. So we play an important part and help our business owners make some really good decisions and then connect them with the great client lenders on the panel today.
Thank you, Sean. So thank you everybody for taking a minute to share what your organization does. I want to jump right into the deeper questions. Our audience here is interested in finding out how they access these kinds of financing options and what kind of lenders there are out there. So the first question I'm going to ask, and we'll have an opportunity to kind of jump around and answer them as it fits your organization, but can you please share what type of loans or funding your organization offers small businesses? Be specific, get into some of the details. And what are the fees? How is the program implemented? Is there, what is the interest structure and fee structure for these particular programs for small businesses? Those kind of companies that have less than 500 employees. I'm going to let that go to any panelist that wants to talk about that. So somebody chime in, please.
I'll go ahead. Go ahead, Darius.
I'll go. All right. I was just going to start since I started the first question to keep the rotation going. So as an SBA lender, we offer various SBA products, such as the SBA Community Advantage and Microloan. These loans have a loan fee, an internal loan fee of about 2%. And the Community Advantage loan has a guarantee fee of 2.25% of the loan amount. So because that loan provides the lender a 75 to 85% guarantee, there is a fee associated to that specific loan. The Community Advantage loan goes up to $250,000, and the micro loan goes up to $50,000. They hold terms of about anywhere from 6 to 10% maximum, unless it's being used to purchase real estate. And there's some other provisions now with the CARES Act in agriculture and what have you. But the interest rates range for us specifically under the Community Advantage program, prime +3. Prime's at a record low right now. I think we're at 3.25%. And the micro loans at 7.75% fixed. We're also currently offering a wide array of relief lending and grant programs to existing businesses that have been impacted by the pandemic. These relief programs are specific to various cities throughout the state of California, from San Francisco to Oakland, Stockton, Riverside, Orange County. We're also working with several municipalities in Southern California. Riverside and Orange County are grant programs with no repayments. However, these programs have been closed in terms of the application process. I know we have a heavy San Diego focus right now, so I don't know if that even pertains to the audience. As far as our city relief funds, these are zero fee, 0% interest loans up to $50,000, 6-year terms, 6-month deferments on these programs. They hold no personal guarantees, no collateral requirements. But I mean, being that we're in the pandemic, it's a very dynamic environment. Things are constantly changing and evolving. So we're just trying to do our part right now to assist in this interesting time.
Thank you.
You can go next to keep our rotation. So we have 2 different programs right now. We have our regular loan program, which are small business loans from $300 up to $100,000. We work with startup businesses, so businesses that are pre-revenue generating and existing businesses for the regular loan program. Those interest rates are between 6.99% and 18.99%, and that's based off of a couple different risk factors. So if you're interested in a regular loan, you haven't been impacted by COVID, which I think everybody has, but maybe you don't meet the time in business necessary for our COVID loan, then you'd be looking at a regular loan. I'd be happy to give you a better idea of what your interest rate would be, because I know that's a wide range. For both of our programs, the fees involved are not charged to you unless you're approved. So you don't have to pay an application fee just to apply. You would only pay the fees if you were approved. So for our regular loan program, there's a 6% of the loan size closing costs, and that's a 3% for our administrative fees, and then a 3% for our state guarantee program. As I mentioned, we're not an SBA lender, and so we guarantee our loans through the state of California rather than the federal government being the SBA. So that's our regular loan program. Our COVID relief loan program right now is in place for businesses that were in business and profitable as of last year. So looking at last year's financials, 2019, that rate is based off of your location. So we have a 1% interest rate for businesses located in the unincorporated areas, meaning the rural areas of San Diego. And then so again, that's a 1% interest rate. And then anybody that would fall within the incorporated areas or the city limits would be at a 3.99% interest rate. And again, for businesses that were in business and profitable last year, those closing costs are 2.5% for our guarantee program. And then for the 3.99% product, it's also a $250 application fee. The loan size is between $5,500, so $5,500 up to $50,000. And the loan size is actually based off of your gross sales from last year. So we're providing 2.5 times your gross sales from 2019. I know that's a lot of information. So again, if you guys have any questions and specifically, you can reach out to me and I can go over if your business was in business last year. You might qualify for a COVID loan, but if a new business as of 2020, or you're looking to start a business because of the pandemic, maybe you lost your job, then that would be our regular loan program.
I'll jump in.
Thank you.
So with the IRC, we really work with clients holistically to apply for various loan products. So we do have credit billing loans, as I mentioned, that start at 0% interest, and then we have a credit building ladder that they can go up to $1,000. And then we also offer auto loans and education loans as well. The education loan is 48 months and it's at 4.99%. And I have had some businesses apply for that as a way to do a training for their business. And then we have had clients apply for auto loans who are doing businesses that require a vehicle for that as well. And then lastly, the micro enterprise loans. So when someone comes to our office and they would like to apply for a micro enterprise loan, we really work with them to get their business plan, cash flow. If they're a new business, we can work with them on projections, and the terms are 9%, and the terms can go 3 to 5 years. We do also offer Islamic financing as well for clients that are concerned about interest. So we offer riba-free loans and build that in as a fee instead.
Thank you.
So in Opportunity Fund, we offer small business loans for working capital, for business expansion, for business growth, for equipment purchase. We have our core loan, which starts in $2,600 up to $50,000. The interest rate is between 10.9 and 18%. We charge a loan fee for the loans up to $5,000 of $75, and for $5,000 up, 5.99 of the loan fee. The requirements is that they have to be in business for 1 year. And for restaurants, we require a minimum of 3 years. And we are also offering the Restart loan, which is our product that we have due to COVID. This loan is a loan that we are offering with an interest rate of 4.25. The loan amount is between 10 and 25,000. There is no loan fee, and the loan term is 27 months, but the 3 months, the monthly payment is only $50. So that's the two programs that we are offering right now.
Thank you. Before we continue, I'm going to jump in. We have 2 questions in the chat, and so I'm going to ask our panelists, I'm going to tell you what the questions are and ask you to jump into the chat and hopefully answer them for your organization. The first question is, it scrolled away. How mature does a business have to be so that you can help with working capital? And the second question is, do you have loans for nonprofit organizations? So if you're not speaking, you're one of our panelists, but you're not actively speaking, if you could jump in the chat and answer those 2 questions for our attendees, that would be awesome. All right, next person, your loan products.
Yes, hi. So we have two products within our Smart Growth team at CDC. So we have our micro loan program, which a minimum of that is minimum loan amount is 20 to 50,000. The rate on that is 9% on this particular loan pool. That's our state guaranteed fund. The fees on that, we have a 3.5% loan packaging fee. That includes the 2.5% that goes to the state. We have a $350 loan doc fee that includes the $250 that also goes to the state. As far as that, we'll do working capital, equipment, small business startup for that particular product. In discussing our Community Advantage product, that product particularly goes from 50,000 all the way up to 250. But our working capital loan is 150 on that. But if you know, we can go up as high as 250 on that particular product. It's a variable rate. Typical terms are 10-year terms on this. Our rate ranges from prime plus 2.75. So prime right now is 3.25, so 6%. Up to 8%, and the way we price that out is off the SBSS score that we get. Let's see, we have a 2% loan packaging fee, max of $2,500. What other fees? I think that's pretty much what we have for that. Yeah, I think that's pretty much, and we'll do small business startups as well with this. I think that's all I have.
Thank you.
And I believe I'm next, if my memory is correct in terms of the order. So for Mission Driven Finance, our advanced loan fund is specific, like I was saying earlier, for small businesses. And right now we're offering $100,000 to $500,000 loans. With the pandemic, we are seeing our loan amounts being at the lower end of that, up to about $250,000. They're 6 months to 5-year term loans. Our current interest rate is 8.75. We have a $250 application fee, 1.5% for closing costs. And we don't require a credit score or a personal guarantee. Similar to IRC, we also offer Islamic-based financing structures. And we look for post-startup businesses that are looking to grow, that are looking for, you know, a bridge to a receivable, things like that. And we are, as an impact-based lender, looking for businesses who are committed to the community and making measurable impact. Right now, we're seeing impact metrics really around sustaining jobs, which is really important in our current economic environment. And yes, we do lend to nonprofits. I linked to our nonprofit loan program. That program currently is offering 0 interest loans to nonprofits that are having to, evolve in this COVID environment. For that program, we are looking again for nonprofits based in San Diego that are either providing services to vulnerable populations that are going through the pandemic and or are looking to, as nonprofits, sustain themselves through the pandemic so that they can be strong in providing services as our community gets through the situation that we are currently in. Thank you.
Thank you. We have one more lender. Nope. Okay, so now that all the lenders have dropped all sorts of random terms that we may not all know about, these lending agreements and things like that, Sean, can you please tell us a little bit about, help us understand a little bit about debt service coverage ratio, what cash flow means, why it's important for loan approval, how it's calculated, is it the same for most lenders? What is the personal guarantee? Some of these things that they've just thrown around as words that we all understand, but maybe we don't all understand. Can you please give us some context?
Yeah. So one of the things that we do at the SBDC is as you just heard, there's lots of different options and it can get a little bit complicated. And so one of the things that we do is we work with you to take you along this path of really start off with, one, how much capital do you need and what's the best use for it? So that's one of the things that we really like to start with our clients is to really determine how much capital you need and how are you going to use it in the business, because ultimately you're bringing on capital so that you can make some sort of improvement to the profitability of your business. And so that decision is really vital to the rest of the process. And then from there, what we do is we go through and start to engage in what's called loan packaging. And that's really getting all the information together so that when we do start to talk with these lenders that we've got all of our information together and that there's a good story there. And so we work with you to develop financials, tax records, business plan if you're a startup. So we start to put all of those things together, and then we move with connecting you with the lenders, and then working with you as you go through that process, and then also continuing to work with you after the loan is funded to make sure that the business is operating on the way that you plan. But so in that process, as Brianna mentioned, there's some terms and some other things that we'll go through as we go through that process. Things like debt coverage, and that basically means on a very simple level is, does the cash flow or the cash that you have coming into the business, is it enough to actually pay for all of the debt that you're going to bring on, which is important to the bank, and it's probably even more important to you as a business owner to make sure that there's a good structure there. So that's a big part of the initial planning is the financial part of that, to make sure that the loan that you're bringing on, this is what we need to do in the business to make sure it cash flows. And the other term is cash flow. So cash flow is really not necessarily the profit that you make, but the cash that comes in and out of your business. So on a daily, weekly, monthly basis, there's going to be cash that's coming into the business and going out of the business. And you need to be able to juggle that as a business owner to be able to make sure that you meet all your obligations of payroll and rent and debt service as well. So that's the other area that can tend to get a little bit complicated. And that's one of the things that we do all the time at SBDC is help, again, navigate through that whole process and work on some of these complicated topics and make sure that you're making good decisions for your business. Okay.
Thank you, Sean. For the lenders, and for those of you who want to answer, a couple of you, talk to us, if you can, a little bit about what a small business owner has to provide to access capital. We know that COVID-19 has absolutely impacted banks, and so some of the things that we had to provide in the past, the bar has maybe gone up or gone down in terms of accessing capital. So if you could please share things like minimum credit score, money in the bank, personal guarantee, collateral, positive cash flow. What are those things that you're looking for in order to be able to, provide capital to a small business?
I'll go ahead and get started on this. Our particular loan package consists of a loan application, personal financial statement, business, and this is for an established business, business debt schedule. We ask for a minimum of 3 years tax returns. If you've only been in business for a year, obviously you only have 1 year tax returns. We ask for your most current personal tax return. Minimum FICO score that we utilize TransUnion on that is a 680. It's a minimum FICO score. Debt service coverage is a 1-to-1 ratio on that. Let's see. We ask that there's no liens or collections currently on your credit report. We ask that no bankruptcies in the past 10 years. So that's pretty much
Thank you. Any other lender have things that are kind of in addition to or different from what Joe's organization is asking for?
Yeah, I can talk a little bit about Accion. We're not an SBA lender, so our criteria is a little bit different. So for our COVID relief program, so again, for existing businesses that were in business and profitable in 2019, our minimum credit score for the COVID loan is a 580. And then we do not require any collateral on that loan. We need to see that you were profitable. So we need to see that, you ended the year with a profit listed on your taxes. It doesn't have to be a certain profit. It just has to be profit. And in certain occasions we can add back. So if you paid yourself, for example, last year, and it shows that your net profit was negative, we can actually add that back to bring your net to a profitable standpoint. Again, because we're looking at last year, we do ask for a balance sheet if you don't have your taxes from 2019. So if you haven't filed your taxes yet, it's not a deal breaker for the COVID loan. We just look at your 2018 taxes and then a balance sheet and then a profit and loss statement from 2000 business financial. Our regular loan, that's for businesses that are starting, or maybe they did show a negative net profit last year. We don't have a minimum credit score. Now the credit score will help to lower your interest rate. So the higher your credit score, the lower interest rate. It's one of the factors that we use to determine the interest rate, but there's no minimum credit score. You do need to be current on your credit. That's very important. With the pandemic going on, there's been a lot of assistance, whether that's with your mortgage or your car payments or your credit cards with deferred payments. So we just need to make sure that if you've taken advantage of those, that those are reflecting properly on your credit. If there's any collections or charge-offs on your credit, depending on the loan size, anything over $8,000, right? So you would need to have paid those collections or charge-offs. But again, no actual minimum credit score.
And from the IRC perspective, so I should have mentioned this before. The IRC really focuses on working with refugees, immigrants, and low-income communities. So a lot of the clients that we work with might not have a credit history at all. So really when we do a loan package, we write about the person's personal story. We have a business plan as part of that. We have projections. Now with people that do have lower credit scores, that might affect how much they will lend them. But at the end of the day, CEO really looks at the person and to see how they can, help them realize their dreams of becoming a business owner. So even if someone applies for $20,000 and they think that that's a good fit for them at that time, they may offer them a lower amount. But they really want to see people succeed. So.
Thank you. I'm going to jump in for just 1 second before we continue with any of the other panelists. We have another question in the chat from Iris. She wants to know if you can please share any loan options for new nonprofits or for-profit companies. So while you're not answering live with your voice, can you answer with your fingers in the chat for our panelists? And for the next organization, any different criteria for determining, how you allocate your loans, or is everybody else's criteria pretty much the same?
Our criteria is pretty much the same too. We are not a FICO-based lender, so we will take a look at the loan history.
I'm sorry, we can't hear you.
Hello? Can you hear me now?
Yes, we can hear you now.
Thank you. Sorry. So I was saying that we are not a FICO-based lender, so we won't base our determination depending on your FICO, and the FICO will not. It's not attached to the interest rate either. So we just require to be not to be behind at least for the last year, because if they were discharged in the last year, and that's basically it. Thank you.
Thank you. Any other special criteria from any of the other organizations? No? Okay, so we have about 20 minutes left on our call today, and I want to make sure that we get through all of these questions. Can you please share a little bit both about, I'm going to combine two of the questions that we have. So I'm going to ask you to answer two questions at once. Share a little bit about your application process. How long does it complete, in order to get to an underwriting decision? How long does it take to fund the loan from start to finish? Does this depend on the type of the project or product, excuse me? And then if you can also talk a little bit about if you lend off of projections or historical cash flow or a combination. So talk about the loan process, and then how your lending decision is made, if it's based off of projections, historical cash flow, or a combination. And some of you already touched on this in your other answers, but I want to make sure that we get that information from everybody.
I'll start, Brianna. So just regarding the application process, yes, it definitely depends on the product. The loan product that's being offered or applied for, as each product holds its own set of operating procedures and credit and compliance requirements. As I mentioned, we are an SBA preferred lender, and as you can imagine, SBA being a federally sponsored loan program can take longer than, let's say, a more direct lending program that may be offered. So we're talking anywhere from maybe 2 weeks for a micro loan after an application's been delivered to be approved, or a decision to be made all the way up to 4 to 6 weeks for, let's say, our community advantage loans. But that can obviously differ. I'm just being a little bit more conservative, depending on how motivated the borrower is and how quickly they can respond to the questions of the underwriters and get the appropriate documentation can significantly shave some time off that timing. As it relates to the COVID relief lending, we're currently doing across cities across the state. It's really set up for rapid loan deployment. Everything's done through DocuSign. We're having 10-minute conversations, sending out skinny loan packages, which contains, loan app, personal financial statement, and a few other forms. Once we receive those, we're basically making a decision in 24 to 48 hours, and then we're funding these things within 2 to 3 business days after it goes to the state guarantee program. Your second question was, do we lend off of projections and historicals? And the answer is yes to both. Typically, when we're lending off historicals, we're also requesting projections because we want to know where the business is going to go in the next 12 to 24 months. So if you're a pre-revenue startup, you're not going to have any historical financials for us to review. So we will ask for projections. And if you're an existing business with, let's say, tax returns or a profit and loss statement, we'll still ask you to create projections so we can see the trajectory of the business.
Thank you. And quick comment on, what Kelly shared in the chat, just so you know that all the lenders here offer services in multiple languages, and the SBDC offers services in multiple languages. I think Kelly typed out about 7 or 8 languages that services are provided in. So just know that if your primary language is not English, that there are services that are tailored to you in the language you're most comfortable with. Next person want to jump in on the question?
Yeah, I mean, we're definitely similar to what Darius just mentioned. We are SBA products, so we do have to wait for either the SBA or the state guarantee to kick in. And so we're on a similar time frame. Business gives me an application. I can pretty much, if I get a full complete application, I can pre-qual the deal to even before we send it to underwriting, to give the client a better understanding of if this is a deal that we're going to go ahead and take a look at doing. So that's about a 24 to 48 hour timeline to get a pre-qual into underwriting. Very similar to Darius as well, is yes, we do projection-based lending. Same thing, pre-revenue business. We are going to ask for a 2-year projection with the business plan for startups as well. For a business that has revenues and there's some discrepancies in their interim financials, or because of COVID has impacted their business, we are going to ask for at least 12 months of projections going forward. So I hope that answers your questions.
Thank you.
I can jump in for the next answer. So our application is completely online. It takes about 20 minutes to complete. From the time that you apply until you actually funded, the time frame is about 3 to 4 weeks, depending on the loan size, but it all depends on you guys. If you guys can send us your documents, I just talked to somebody last night. He sent me all his documents this morning, and I'm underwriting today. So once it gets to underwriting, it's usually probably about a week between sending it to our guarantee partners through the state. So, I've seen loans funded in 1 to 2 weeks. A good thing about not being an SBA lender is we don't have to wait for the SBA, but we do have to wait for our state guarantee program, but they're usually giving us loans back within about a week. So our time frame is pretty fast. I always say it's really important to work with your SBD counselor to get prepared before you apply for our loan, because we do move quickly. And then as far as lending based off of projections for startup businesses or pre-revenue generating businesses, we do lend based off of projections. We ask for 1 year of financial projections. And then for any business that has been in business for more than 6 months, that's what we consider as a startup, 6 months or younger. Anything over 6 months, we look at the historical cash flow.
Thank you.
Our credit building loans could take, a day or two because they're very small. Whereas business loans can take about a week or two. Anything above $15,000 goes to an external committee. So instead of 5 people reviewing it, it's 10 people reviewing it. So that takes a little bit longer. But I would still say with that, it's maybe 2 to 3 weeks. And then we do fund off of projections, or if you're in business already past cash flow.
Thank you. Our next lender?
For mission-driven finance, typically we take about 6 weeks. Our loan sizes are a little higher, so they're taking a little longer. I will emphasize the point many other lenders have made is there's a responsiveness component. So the more quickly we can get all of the requested materials, the easier it is for us to do our analysis. And I'll also add that our nonprofit loan fund does have a layer of going to the San Diego Foundation for approval as the investor, so that can add another week or two. Some of our loans also go to the state guarantee program. That could add about a week in some instances, but overall, we just say, let us know what your timeline is, and we're happy to individually work with you, recognize that, and understand what we need to do to get you what you need in that timeline. So we want to be as responsive as possible. We also lend to projections, and similar to other folks on the call, we do look for 12 months of projections, and then anytime there is a documented account receivable, a contract, anything like that for future revenue, that's super helpful for us to understand what that is looking like for the loan application.
So for us, our application process for the core loan, it's between 5 and 7 business days. And again, it depends how fast we get all the documents. We just, depending on the loan amount, the basic documents, application, picture ID, proof of business, last 3 months of bank statements, and 1 year of personal and business tax returns. For our core loan, the Restart loan, we mail a disclosure to authorize a soft pull and a hard pull on the credit. And once we get all the documents, it takes up like 2 or 3 weeks to get funded. And we based our lending in cash flow, but we can also take consideration projections, like if you are getting a contract or something like that, that also helps on the determination. Thank you.
Thank you. Okay, so we have about 9 minutes left, and I want to make sure that we get through the rest of the content. So I'm going to ask the panelists to be really concise. In the last, we're going to have a couple of panelists answer questions around companies that they've helped secure funding. So maybe 1 or 2 of you can answer a question around a company that you've helped secure funding, and a company that was rejected funding and the reason why they were rejected. We're going to reserve the last, so we're going to keep that to 3 minutes. So just 2 answers from 2 of our panelists. And then the last 5 minutes, we're going to spend in a lightning round with your just 1 tip that you recommend a business in this environment. So if I could get 2 panelists to give us a quick example of companies that you've supported in securing funding, and then a company that didn't receive funding and the reason why, and we'll head into that lightning round.
I'll jump in on Brianna. Do you want me to discuss both one that we funded and one that we didn't, or just the funded?
Whatever you prefer is fine.
Okay, I'll just talk about a success story. So while we have Sean on the line, Sean from the SBDC and I worked on a business together. Geez, it must have been a little over a year and a half ago. Through our Veteran Launch Program, which is a lending initiative that was catered to veterans, active duty and military spouse throughout the state of California. This individual had about 6 deployments to Iraq and Afghanistan, 20+ year Navy SEAL equivalent, combat injury, service disabled veteran, was getting his, I believe his graduate's degree after serving in the military, and wanted to start a gym, a Krav Maga gym in the South Bay. And Sean initiated the conversation, scheduled a meeting, and I sat down with this individual, and it was a challenging proposition from a credit standpoint. He had obviously gone through some trials and tribulations from all the deployments he had had. I think there was even a divorce thrown into the mix. So there were some credit challenges, but he was very determined, and that's what really got this deal processed, because although the credit was less than stellar, we were able to create a plan through, working with the SBDC, generated a plan of attack. I mean, he needed more capital than we could offer, but there was a happy median where he was able to sell off some of his personal assets to make up for the difference of capital that we were able to deploy because he didn't qualify for the SBA Community Advantage loan. Because of credit issues, we did put him in the SBA micro loan bucket and offered him a $50,000 loan in which he invested, I believe, somewhere in the tune of $25,000 to $30,000 of his own capital. Got the gym started, and Sean and I were just talking before this presentation on how our guy is doing, but I'll make sure to follow up with him here in the next couple of days. So that was a happy story for us, seeing an individual who served our country jump in and be able to basically start his dream in opening up a gym.
Thank you. And actually, I'm going to direct Sean and put you on the spot a little bit. If you can share a success story from the SBDC and a very brief, because I know nobody likes to share the stories that aren't successful, but we've learned so much from them. If you could share just a very brief, like, learning opportunity type of story. And while he's doing that, I'm going to ask all of the panelists to come up with their brief one-sentence tip to share with everybody. Think 10 seconds, 15 seconds at the most, and we'll run down the line in that lightning round and wrap up on time. Sean, please share.
Yeah, and what I'm going to do is, because I think it applies to a lot of different situations, is the example that Darius brought up. I think is a great example of that between SBDC and the lenders that we work with. It really is a process that goes beyond the numbers, and we have a lot of flexibility. And so that's a great example. And we have a number of them that maybe right from the start, there may be some challenges that we need to work through, but we usually are able to work through that. And so I think that's a great example on the success side. On and usually from the SBDC side, I'm going to speak to that we do have deals that don't move forward. And a lot of the reason is because one of the things that we do, our objective is not necessarily to loan money, but our objective is to help a business owner make a good business decision. And sometimes a loan in that particular time frame in the business is not the best thing to do. So as we go through the process, we're able to identify that and have a discussion about that. And maybe the loan is going to be better at a different time period. But so most of the deals that don't go forward, it's because in our collective process, we've determined that a loan is probably not the best thing for that business at this particular time.
Thank you, Sean. I appreciate that. Okay, so lightning round, your 10, 15-second recommendation of what to do or to not do when you're applying for a loan. Let's start with Main Street Launch, Darius.
Brianna, did you say what to do and what not to do?
Or what to not to do. Just one recommendation, what you should or shouldn't do.
Yep. I would say understand your financials, such as your monthly revenues, cost of goods sold, and operating expenses and bottom line. Manage your books, accounting. If you're not doing it personally, have someone who you can trust that's doing it for you.
Thank you. Juliet from Accion.
Yeah, my tip is to prepare yourselves. So prepare your credit. Credit is a big factor in lending, whether it's your credit score or what's on your credit. Contact me if you need help preparing your credit for free. I work with another nonprofit organization that does that. Prepare your business plan. Prepare how much you're looking for. Never come to a lender and say, how much are you going to give me? I'm looking for as much as you can give me. So just prepare. Prepare.
Thank you. Kelly from the International Rescue Committee.
Make sure that you are keeping good records of your financials. It'll make it a lot easier. And then I would say also really work with your SBDC advisor, because they're your biggest champion and they want to see you succeed as a business.
Thank you. Adela from Opportunity Fund.
I agree with Kelly. I would say to look for help. You are not alone. The SBDC has free services. They won't charge you for anything. So I think it's a really good resource to grow your business.
Thank you. Joe from CDC Small Business Finance.
Would say be open and transparent to your loan officer, because we are going to find out everything. If you having credit issues, you know, you know, we want to get your loan done for you. So we're your biggest advocate as well as the SBDC. But, you know, from the initial get-go, be open and transparent.
Thank you. And Shreya from Mission Driven Finance.
+1 to everything that's been said, and the SBDC is a great resource and a great starting point. Thank you.
And last but not least, Sean from SBDC.
Yeah, I think all the good ones have been taken, but I'll just kind of reinforce that really spend a lot of time up front to really determine how much capital you need and how you're going to use it in the business. And as opposed to just jumping in, hey, I need money. I think making a great business decision on your capital is something that is vital to your success.
Thank you, Sean. So we are right at 10 o'clock. I want to thank everybody for being here today. Our panelists, thank you so much for sharing your insight, your knowledge. Hopefully you'll get a flood of contact from everybody that was on this session. We'll be sharing this, we'll be making this recording available as well. So for those attendees who have been asking, you know, how do we get that information, know that that will be available. I'd also like to invite you to join us again on September 25th for the Meet the Alternative Lenders panel. So we'll be talking to LendSpark, Primary Funding, Marble Bridge Funding Group, a bunch of others. We also have our Connecting with Capital series continuing in October. On October 9th, it's the traditional lenders. On the 16th, it's the mission-driven lenders again. And on the 23rd, it's alternative lenders. And then, of course, we could not make any of this possible. You know, all of these organizations are nonprofits, and we're not making, we're not charging fees, or at least the SBDC is not charging fees for our services. So this would not be possible without our sponsors, Home Street Bank, Main Street Launch, CDC Small Business Finance, Marble Bridge Funding Group, and Primary Funding. So thank you to everybody. I hope you have a wonderful morning, and we'll look forward to hearing from you soon. And if you haven't yet, definitely reach out to your SBDC and set an appointment to talk to an advisor to help guide you through some of your questions. Have a wonderful day.
Thank you.
Thank you.
Thank you.